this is the third and the last method of calculating national income, and that is the income method. Income method measures national income from the perspective of factor incomes. Remember what factor incomes were? Factor incomes are the incomes earned by it's the income earned by the factors of production. What are the factors of production? There are 4 factors of production. What is it? Land, labor, capital, and entrepreneurship. Land, labor, capital, and entrepreneurship. Land receives rent, labor receives wages, capital receives interest, and entrepreneurship receives profits. Okay, so these 4 factors of production receives these 4 factor incomes and factor payments. Now ये method कैसे हमें income हमें national income देता है? So एक example है जैसे कि जो हमारा value added होता है, right? Value added मैंने कहा था कि value added में से you can subtract intermediate consumption, but don't subtract rent, wages, interest and profit, because वही तो आपका value added है. आप वो भी subtract कर दोगे. So what इस production unit का you will not get any value add, because the value add is this only. This is what any production unit contributes, right? So if this is the value add, then these all in some sense can be understood as the value added, right? So this is how you can look at it, that why the sum of these should also be equal to the other methods. Okay, so under this method, the income received by all the residents of a country for their productive services are added to obtain the national income. Okay, all right, so this is also known as the factor payment method or the distributive share method. So different factors of production, we'll just do it in a little detail. दो आपके एग्जाम्स में तो अभी तक नहीं आया है, but कभी भी आ सकता है, because national income, as I said, is important for JNU and IIT, and JNU का pattern बहुत change होता है, so we need to do everything very carefully for the JNU topics. You know, there are 4 components. So when I said that there are 4 factor income, right? So I said there is wages, rent, interest, and profit. Okay. Now the first, wages, it is loosely called wages, but it is actually called as compensation of employees. The technical term, the correct term, the term that you need to know is compensation of employees. Now what is compensation of employees? It refers to the amount that the employer pays you for rendering productive services. So when an employer pays you, it may pay you in many forms. So there are 3 forms in which an employer pays you, and all the 3 forms need to be included. Okay, when you calculate the compensation that an employee gets. Okay, so an employee should be getting wages and salaries in cash. So that's of course the first component. All wages, so this includes all wages. It includes bonus, dearness allowances, any commission. All this is included. What is not included is, suppose आपने taxi ली घर जाने के लिए. Okay, so your employer reimburses you. That is not part of wages. Reimbursement of business expenses incurred by employees is not included, because that is a business expense that he is not paying you for your work done. That he is paying you for, that is paying you because that you need that to run the business. That's not your earning. Okay, so only your earning in cash is included in the first component of wages and salaries. That is your earning in cash, not your reimbursement for company expense. The second way in which you earn is something that you may get in kind. So if you get a house from the company, that should be part of your compensation. You're getting it because you did some work. So all non-monetary benefits, like if you're getting a rent-free home, free car, free medical facilities, educational facilities. Okay, and what you need to do is that if you're getting a rent-free home, then rent जो होता, जो आपके pocket से जाता, which is not going right now, you have to impute the value of that, and that needs to be included in national income. Okay, if you're getting an interest-free loan from the company, that interest is part of what they are paying you, right? So this should be all included in part the national income. Iसीलिए when you get your salary slips, there's so many components in that. Okay, because all of them need to be included in national income. Again, you will not include in this any part which is not part of your compensation. For example, if again you buy uniform for the company and then they reimburse you for that, that's not part of your compensation. Okay, again, this is part of intermediate consumption of the business enterprise. That's not part of wages in kind. Okay, then the last is employers, not employees. Employers' contribution to social security schemes, which means that sometimes there is the provident fund, that employer may pay you for. There's employer pays from their side, retirement pension that the employer may be contributing. So if he's contributing some money on your behalf anywhere, generating some welfare fund, some gratuity fund, whatever. If any such fund exists, then also that contribution, employer's side of the contribution needs to be included in your compensation of employees. So compensation of employees is a wider term than wages. The next is operating surplus. What is the meaning of operating surplus? It is the income which is generated. So income generated in the form of rent, interest as profit is all clubbed together to be called operating surplus. And we do that because this is the income for the entrepreneur. So usually क्या होता है, entrepreneur when he runs a business, वो अपना ही पैसा लगाता है, but doesn't pay any interest to his own self. He provides his own premises, but doesn't pay any rent to his own self. He does work in the premises, but doesn't specifically take a salary. That is in mixed income of the self-employed. But I'm just saying that a lot of times the rent, interest, and profit is clubbed together as income from property and entrepreneurship. Okay, which is together called as the operating surplus. Okay, so the first part of operating surplus is rent and royalty. Rent is what is paid from ownership of land and building. Rental income includes the rent. That is to be included. If you've given your property out to someone else, that is to be included. And if you are staying in a house, you are paying rent to yourself. That should also be included. So self-occupied properties have imputed rent. That is also included in national income. And when you rent out to someone else, then you get rental income. That is obviously included in national income. Royalty is, so we can just read through this. It is the income received for granting leasing rights of subsoil assets. For example, mineral deposits like coal, iron ore, natural gas, etc. can earn income by giving rights of mining to other contractors. So if you own that land, but you don't want to invest in the mining equipment, the whole mining industry, if you don't want to invest in that, what you get is royalty. Okay, what you get is a part of, basically it's a part of whatever they own. So that is called royalty payment. So rent or royalty, whatever you get, that's part included in operating surplus. Okay, the next component is interest. Interest refers to the amount received for lending funds to a production unit. So again, it is the same. Actual interest bhi aayega, imputed interest bhi aayega. That, for example, if you have used your own money, that means you've given a loan, you should be given interest to your own self, basically. So even that needs to be included. Come from profit or income from entrepreneurship. So that everybody knows now, it is the reward for entrepreneurship, reward for setting up this production unit of producing goods and services. It is the residual income, that everything which is left after everybody else is paid, that's called profit. All right, now profit also includes three things. The profit which is earned by an enterprise is used for three purposes. Corporate tax, it is the direct tax paid by an enterprise to the government on the total profit earned by it, profit tax. So tax is part of the profit. On the profit, that tax that you pay, that is still included in national income. Dividend, that part of profit which is given to shareholders, that is included. And then retained earnings, some part of the profit which companies have, they don't give out to anybody. They just keep it for their own selves so that they can reinvest it later. So that's also called undistributed profits or savings. Okay. So retained earnings is also included. So profit includes rent, profit includes corporate tax also, dividend income also, and retained earnings also. All of these has to be included in profit. Usko hum hatayenge nahi. Okay, so in short, profit is all these three. So when you add rent plus interest plus profit, it's termed as operating surplus. Okay, and the last component is what I was talking about earlier, mixed income of self-employed. That a self-employed person usually does not pay different things to his own self. He only just pays one profit. उसमें सब कुछ आ गया, रेंट भी आ गया, इंटरेस्ट भी आ गया. So income generated by everyone, farmers, barbers, retail traders, because it has elements of all different types of income, wages. Okay, so the income that self-employed people work. For example, me, I am a self-employed person. So if I have my own property in which I am holding classes, if I'm investing my own capital in my classes, if I am, investing my own, my own entrepreneurial services, everything, I don't pay myself interest or rent or something. So what I earn is called mixed income of self-employed. It can't be divided into different elements. All right. So this is the summary of the income method. It's pretty simple. You add compensation of employees, you add operating surplus, you add mixed income of self-employed. Compensation of employees has three components: wages in cash, wages in kind, and employer's contribution to social security. Operating surplus as rent, interest, royalty as part of rent, and profit, where profit is divided into dividend, corporate tax, and undistributed profit. And mixed income of self-employed is just one figure, which is the mixed income of a self-employed person. We take all of these and we add, and what do we get? The sum of all of this is NDP at FC. So that's the interesting thing, that अभी तक जब भी हम तीन methods, हमने दो methods किए हैं, right? We did expenditure method and we did value added method. The sum of both the two were GDP at MP. Expenditure method का sum and value added method का sum was GDP at MP. Income method ka sum is NDP at FC. Okay, so when you have income method and you add all these components together, what we get is NDP at FC. Okay, so this is not GDP at MP. So this is one thing that we have to remember. Okay, so NDP at FC, this is what we get. And if you want, you can get everything else from there. Okay, now there are certain things, again, precautions and things that we have to keep in mind. Let's go over that. First thing that we want to do right now, when we do, the things we need to be careful about, is to differentiate between these two terms, factor income and transfer income. Okay, factor income, we've probably discussed this, that it is the income earned because of work done. Okay, so when you earn some income, it's called income because of work done, and that's called factor income. When you don't earn it, but you get it, it's called transfer income. All right, so payment made to households, enterprises, non-profit institutions like Greenpeace, if they don't render any service in return to you, then that's transfer income. If I support Greenpeace, let's say, and I pay them something, that's not factor income of Greenpeace. Okay, because that's transfer income. Now they are unilateral. Unilateral, basically the word unilateral means they are one-sided payments because they're not earned, only received. For example, old age pensions, unemployment allowances, scholarships to students, government subsidies, gifts, donations, all are a part of transfer income. They are not part of factor income. All right. So now let's go to the precautions while estimating GDP. So the first precaution is what we just discussed: transfer income like scholarships, donations are not included in national income, not included because they are not connected with, again, productive activity. It's not because of any work that they are doing. income from the sale of second-hand goods. Okay, the value of those second-hand goods will not be included, but any brokerage or commission will be included because that's income earned for work done. Again, the value of the sale of shares, bonds, debentures will not be used, but commission on the sale of share, bonds, and debentures will be included. Any lottery, horse race, prize winnings, not included. No work is done, sorry, in terms of productive activity. All right, then like we just discussed, imputed value of owners' production units will be included. For example, imputed value of owner-occupied houses, imputed value of in capital used by our own self, and so on. So imputed value of all factors which the owner is using, that has to be included. Now, another important point, payments out of past savings. Okay, so like a wealth tax or a gift tax are not included because they're paid out of past earnings, not current. Indirect taxes are not included in national income at factor cost. However, of course, they're included in the national income at market price. This was the concept of the income method. To just revise, income method will just be compensation of employees plus operating surplus plus mixed income of self-employed. We sum it up and we get NDP at FC, and then you can get anything else that you want from here. These are the three methods of calculating national income.